Hello, everyone. Welcome to our webinar where Robert Chadwick, my fearless co-founder, and I talk about 2025, our market outlook for U.S. real estate investing. I think it's a very timely discussion given what an incredible year we just had in 2024. We have a new administration coming in, and there's a renewed sense of optimism. Globally, a lot of good things are happening. And we are the absolute leader in how to invest in U.S. real estate outside the U.S. So my portion of the presentation will talk about home prices, inflation, where I think mortgage rates will be, and then I'll hand it over to Robert, where he'll go into what we've accomplished as a firm, as well as some of our new products offerings, and of course, an update of our loan programs.
All right, so Donald, do you want me to start the slides for you?
Sure, let's do it.
Go. I can't say that. We got a little bit of technical problems there. Are you able to view it?
I can see it.
Okay, all right, hold on.
There we go. All right.
All right, there we go.
All right, cool. Let's get it going. Next slide. All right, my portion, U.S. rates and market outlook. Okay, so we ended the year at, first of all, let's talk about interest rates. And so without talking about interest rates, we have to talk about inflation. We ended the year at 2.9%. Inflation is not contained, but it's certainly heading in the right direction, especially over the last couple of weeks. I think big components like shelter, and in a perverse way, this kind of helps property investors like us. But in a big component of inflation is shelter or homeowner equivalent rents. And that's almost 30% of the inflation basket. And the recent almost 5% rise is a lot, and that helps people like you and I who want to be property investors, because that means our rents are going up. But 4.5% rise is still the lowest in 3 years. So we're almost getting the best of both worlds. One, our rents are still going up, so our ability to negotiate higher rents with our tenants, which is what we want as landlords, is still very strong, but it's not so crazy hot where it's making inflation higher. Previous slide, Robert. Yeah, okay. Another good thing is, oil seems to be, which is also obviously a very big component of inflation, it's coming down. I expect it to further come down. So there is a little bit of breathing room, at least over the last couple of weeks, that mortgage rates will move slightly lower. And for those out there looking to buy a home, this is just in time before spring purchase season. Next slide. All right, so the market is expecting the Fed funds to be cut by 50 basis points next year. It's important to know that mortgage rates are actually tied to 10-year treasuries and not Fed funds rate. And 10-year treasuries are based on a lot of things: inflation, like I just said, GDP growth, monetary and fiscal policy. As all of you, am sure, are aware that there is a worry that there's going to be increased spending with the new administration. That's kind of kept the long end of the yield curve higher. And at the end of the day, Fed is basically Fed funds are the shortest duration interest rates. It's what the Fed is lending to banks who need to kind of fill their deposits overnight. So, the market controls what, the long-term mortgage rates are. So I think if the market expects things to be a little better, we'll see mortgage rates come down and, fingers crossed. Okay, so, we're obviously in a world that's going to be higher for longer. I think expectations for mortgage rates to go back down to where they were is unreasonable, because at the end of the day, they were low because the economy had a problem with the pandemic and other issues. But that doesn't mean that there aren't opportunities to make money. So I suspect that longer term, we're going to hopefully hover around 6% later on this year. But here's something I want to talk about that I don't think is being discussed in the market, and this is my own personal view, is that if you look at, the fiscal budget, there are really three big components. There's defense spending, there's entitlements, and there's interest expense. Now, we've got an incoming, administration. There's a few things that I don't think that they can reduce, especially in this new heightened geopolitical environment globally. So I think defense spending isn't touched. Entitlements are way too politically sensitive, and I think every politician, no matter where you are, they don't, their ability to, they don't want to stomach pain. So I think the only kind of variable left is interest expense. So I actually think, with negotiating with the dollar and different types of issues globally, I do think they're going to find a way to bring down interest expense, i.e., interest rates, the long bond yields on these new issuances. So that's kind of my own personal view. I think it has to be done, but the market isn't really expecting this. So fingers crossed, we get that outcome. All right, so let's talk about home prices. So first of all, supply and demand. So we averaged last year 4.2 months of inventory. A comfortable spread is between 5 and 6 months. The worst we saw was under 2 months. So the market is coming to a reasonable equilibrium point over the short term. However, the bigger issue is that there still is a massive home shortage nationwide. So despite being a more balanced market, the market is still extremely favorable for landlords, like all of you on this call. The extreme longer-term shortage will continue to drive more renters paying higher rental yields. So what that means is that, we've said this in different pieces of research that we've published, is that, it doesn't matter which government it is, which country, but governments have a very difficult time affecting supply. They can affect demand, and they affect demand by, increasing stamp duties or increasing taxes or lowering taxes. They can't actually force private developers to say, hey, go build, 5 million homes. So I think it's going to still be a very, very supportive market for homeowners for the very long term. So home prices. So last year, home prices were up 3.4% nationwide. In fact, if you dig through the details, it's pretty incredible. If you take away sort of the coastal states where most of the high value homes are, some markets saw, a lot of markets saw high, not high, but mid-teens to mid-20% growth, which is incredible in a market where interest rates are still very high. So up 3.4% last year. In 2023, it was up 6%. The median home price is $420,000, and that's up 25% from 2020. Again, if you look at some of the kind of the robust states where you see a lot of gentrification, some of these home prices have doubled in just a few years. Here I took a snapshot of the average estimates for home price increases this year. As you can see, it's a wide range, but if you just eyeball an average, it looks pretty robust at 3.5% or so. So 3.5% property home price growth. You've got inflation at 2%, and you can leverage that home purchase with rental yields easily in the teens in some of the states that we are advocating to be investors in. I think that's a very financially safe and lucrative investment. Next slide. All right. So nowadays you have to be a little more creative and do more work with your investments. Back in the day when interest rates were record lows, everything went up. You didn't really have to be in particularly smart about what you're buying because everything was going up. So it's important to kind of identify what is making these home prices go up, and I'm just going to highlight one of them. There are many different strategies here, but one of them is the CHIPS Act. We wrote something about this last week. During the previous administration, The CHIPS Act, among others, were really, really good for adding jobs. 500 billion worth of investments, adding, oh, there's a typo, sorry, 500,000 jobs across the nation. Now these are high-paying, high-skilled jobs, and they focused on, I mean, there's a lot of states involved, but these are all the big, semiconductors. This is a national security issue. They want to reshore some of this manufacturing. And I can't, there's some markets like Arizona, Texas, New York, Ohio, and Oregon are some of the states that have been chosen to kind of buoy a lot of this, where these semiconductor companies will be placing their operations. So this is something that, I like to do when I invest. I like to find something that is going to make this go up. For example, right now you're probably seeing that Florida prices are weak. Florida didn't really have a macro tailwind. It was just a nice place where people wanted to move to. So a lot of that gentrification from New York, because the cost of living was too expensive, they moved to Florida. It wasn't like, or Austin. Austin is seeing some price weakness, but it was just a really nice place for people to move to who couldn't afford to live in California. And it probably is the most California city in Texas. So, I like to look at things that have stronger economic, tailwinds, and this is one of the many, that we're looking at. Next slide. And I think, listen, there, like anything in life, if you look at, some people like to invest in crypto, and if you're investing in crypto, under the crypto umbrella, there's altcoins, there's Web 3.0, there's DeFi, TradeFi, whatever it is. In equity, some people like to day trade, long-term hold, buy dividends. In real estate investing, you have to find your style as well. There's some missing information here. Okay, so for example, I'm just going to name a few of these. So one of them is the BRRRR method. So this is a very popular investing style where you buy slightly undervalued homes in a neighborhood, renovate them, then the value is forced higher, then you refinance by taking money out of the higher equity value, and then you rent it out and repeat. Another one is a Section 8 investing, where governments will guarantee the rents on these houses, and this has been a very successful strategy in many of the Midwest states. And all of these strategies are strategies that we can offer financing as well. So short-term rentals, I'm sure everybody knows about Airbnb. In some markets, they're more robust than others, and in some states it's actually illegal. But we can help you with this. Some states it's still a very popular way to be a property investor. There's other things like, do you want to like, for example, some people like to invest in college towns, like colleges. Boston is a college town. Philadelphia is a college town. In fact, not to plug, we're bringing on a realtor to talk about Philadelphia and Massachusetts next month, because this is a college town investment style. Because as you know, demand for going to college ain't going to decline anytime soon. So that's something that people feel good about. Do you want to invest in a bigger city? Like you want to invest in New York? New York is good for trophy assets. Will it give you the type of rental return like maybe in the Midwest, in Ohio, or maybe in some parts of Texas? Probably not, but people like it because it's stable. New York City is never going to go away. Or do you, slightly down the risk curve, is smaller cities? So these are all, kind of things that you have to, everyone is different. We can help you walk through some of this rationale. But ultimately, what we want to do now is we want to build a passive income portfolio that's with recession-proof assets. And what I mean by that is that, because of where affordability is, people are just going to have to rent, and it's just this. As the U.S. comes to grips with this reality, folks that have the ability to be a landlord are going to be in a better position. And I think this is really the upshot of what I'm trying to say here, is that now more than ever is really the best time to be a property investor in the US. All right, now it's time to hand it over to Robert to go through US mortgage loans and what we've accomplished this year, and a lot of the exciting new things that we're working on in other parts of American Mortgages.
Yeah, thanks, Donald. I think before we get on to my slides, maybe we just talk a little bit more about how the CHIPS Act can impact real estate investing. I know your team and spent a lot of time on the recent articles. So if anybody is on our mailing list, you would have received the article. I think it was yesterday. You may want to take a look at it, but Donald, I don't know if you want to expand on that a little bit more.
Yeah. I wish I still had the data on the top of my head, but you just imagine. I'll just give you an idea. So, the Southeast corridor, that's Tennessee, Alabama, some of the Carolinas, and including Florida, they are building they already approved building 9 EV factories, right? Each one of those factories has to hire between 2,000 to 5,000 people. Now, so you think, 9, 5, that's like 40, 50,000 people. Do you think 50,000 people can afford a $400,000 home? Probably not. But so they're going to have to rent, right? And that type of push really, you just can't build homes fast enough. Now, and I think that's the kind of thing, and also there's indirect employment as well. So every semiconductor plant, you got to have, a Home Depot and a Lowe's and a Walmart and coffee shops and these indirect job opportunities. And people will see this and they'll start to gentrify into these states. It's super, super powerful phenomenon. And, that was approved during the, the Biden administration, but it's something that, is not, it may be rebranded something else, but what I'm saying is there's a big movement right now to bring this manufacturing back onshore for all countries. But the US is just in particular, very unique because its ability to gentrify is better than any other country in the world. You can't afford to live in California. You can move to Texas. You don't want to live in Texas. You can move to North Carolina. It's super easy. And that's really the US's ability to make that happen is better than any country. So I think that's kind of what, in a nutshell, those 5 states in particular, Arizona, New York, Ohio, crap, I've already forgotten all of them, but that's taking the bulk of the employment, employment for the CHIPS Act. And in fact, in the chat, we have an ebook that we published 2 months ago about the U.S. cities' rental yields and how they compare to, international cities. So I think that's something you want to download as well.
Yeah, and I don't think we've seen a driver like this for not only just high rental prices, but for capital appreciation in decades. So yeah, if you're considering this and you have an opportunity to read the article, please feel free to reach out to either myself or Donald, or even one of our loan officers, and we can assist you in the markets that are potentially affected by this.
Yeah, so I'll just add one more thing. We had a client. We've had we have a client right now that's, flown to Chicago. We have a client that also likes the Midwest, and they told us that in some parts of the Midwest, it is gentrifying. These are historically maybe not Detroit, but historically quite very blue collar. And they said that in places that could have looked like maybe slums are now there's art galleries, there's coffee shops, and it's because Intel is building a fab 10 minutes away, right? So these are kind of things you just need to do a little more research now. You have to be smarter about how you make money, and you have to find things that's gonna appreciate your financial investment. And again, I'm going to hand it over to Robert. If you want us to walk you through any of this, like the rationale, which states, which cities, give us a call, message us, contact us. Happy to get on the phone and kind of walk you through this rationale. Sorry, Robert.
No worries. And just to kind of touch on that, in the chat, there is a link to that particular article that you can click on and view, as well as another link where you can apply for a loan or even schedule a call with a loan officer. So you can see that within the chat. So I'll give you the general mortgage overview of what we can do at American Mortgages. So of course, on the loans, we can do a purchase, refinance, equity release. We're seeing a lot more demand for people wanting to cash out. If you're a foreign national, we can go up to 75% loan to value without US credit. If you are a US expat and you still maintain US credit, then we can get up to 80%. So all of our loans are 30-year fixed rates, regardless of the borrower's age. Now, in the US, you cannot discriminate against anything. Age is also one of the things, and because of that, they consider if you're a 19-year-old or a 99-year-old, you should still have the same opportunity for real estate investing. So it's the only place in the world that I believe that has that, and it makes it to where you can really optimize your returns. We have a really fantastic program where obviously, interest rates are slightly higher, but we can do a 10-year fixed interest only, where it's a fixed rate, you're servicing only the interest, and then after that 10-year period, it converts into a 20-year fixed, and you're paying principal and interest. Loan programs, of course, in all 50 states. And what makes it actually very unique is we use common sense underwriting. Rather than qualifying you on your personal income, we qualify you on the income that the property generates. So basically the cash flow of the property, not your salary. We allow foreign earned income if you choose to do an income documentation loan. So either way you go, as long as either the rent covers the mortgage or you have sufficient salary to be able to service the debt, you should be able to close the loan quite easy. Our borrowers are either non-US citizens or US expats overseas. Again, on all of our foreign national programs, there is no US credit required, and there is no AUM, meaning that we only do dry lending. You will not have to open up a bank account or put a certain amount of funds in order to take advantage of our mortgage loans. Normally, we have loan approval in 72 hours. We can issue a pre-approval letter within 24 hours. So as soon as you submit your documents, we'll be able to issue that pre-approval letter, and then you can go shopping. On average, our closing times are very quick, anywhere from 30 to 45 days, and there is no need to travel to the US. You can sign your application and your closing documents all from the country that you live in or the country that you're currently staying in. And something we are very, very proud of is 97% of our loan applications that we take in are approved. And if they aren't approved, it's normally something based on the property and not so much on the borrower. Of course, as probably everybody is aware, we have loan officers in 12 different countries. We have a calendar that is 24/7, which allows you to book and talk to a loan officer on your time and often in your language. So going forward into 2025, our goal, or Donald and I, our goal is to be able to make US real estate investing not only easier, but more accessible to everybody. So here's what we've done over in 2024 to carry us into 2025. So we've launched a new lending platform. That new lending platform allows us to be able to securely upload documents, to be able to take the application in a very easy manner just by answering questions. And it allows you at any time to either chat with somebody or even just look at the status of your application. We've lowered our loan amount to $100,000. That was lowered from $150,000. And what it does is it just allows everybody to be able to get into US real estate, whether you're a seasoned real estate investor or you're somebody new. And with up to 75% financing for a foreign national, it's minimum down payment to start this whole journey. So again, no US credit is required on all of our loans. We've added some very unique partnerships because we realize our borrowers living abroad, probably very busy, they don't have access to maybe what a US citizen would have access to. So we've been able to have these partnerships with various groups that almost make it a turnkey process. And something we're really happy about we'll be announcing within probably the next couple of weeks is a partnership with a real estate firm. And what it will do will be make the process of finding that perfect property much easier by putting you in touch with somebody just like us that deals with foreign nationals and expats, somebody that also understands this when it comes to real estate and properties. So if you're aware or you've talked to any of our loan officers or you've read any of our newsletters that go out, we always recommend that you choose to hold your property, the ownership of the property in an LLC. And there's a variety of reasons why we do that, but really the main thing, besides some few tax advantages, is to be able to limit your liability only to the entity that owns the property. So, if something bad happens in that property and you get sued, it's stopping at the entity and does not go up to the actual UBO or the borrower. So it's fantastic. We have a great company called Nobility Consulting that can set it up very quickly and very inexpensively. We have tailored strategic tax solutions with AI tax. AI tax is similar to us. They focus only on foreign nationals and expats. Their expertise in this type of tax structure to where they try to make it where you really are not going to be paying income tax on the rent that you're receiving from the property. And if you have proper tax planning, that is actually something that's very achievable. You got to transfer money, whether it's the down payment, monthly payments, whatever it is. We have a partnership with Halo. Halo allows you to take advantage of the best FX rates. You can even set your monthly payment so you know exactly what it is without any currency fluctuation. And of course, everybody needs hazard insurance, as we've sadly seen what's been going on in California, where a lot of insurance was canceled. We have a partnership with a fantastic group called Steadily, which will assist you with getting your hazard insurance, which in case of damage on a property is the replacement value of the property. And again, 24-hour loan officers, you can reach us at that phone number listed, and it'll also be dropped into the chat. 24 hours a day, 7 days a week, you'll be able to reach somebody on this number. So I'll just kind of go over a few of the things that we've added, which we've spent, I mean, for the lender portal, Donald, I think we've probably spent at least a year working on this. It makes applying for a loan a very simple and easy process. It's also a very secure platform. So once you apply for a loan, you register, you sign, you have your own portal from there. You're able to upload your documents securely. You're able to see the progress of the loan 24 hours a day, 7 days a week. The loan officer is able to tell you, you're missing this document, you need to upload this, or whatever it may be. You have a question, you can put it into the chat, and somebody should be able to reply right away. So it's made the process of applying for a loan much, much easier. And again, going back to our goal for this year is to be able to make U.S. real estate investing just a seamless process from the application all the way to the closing. So our loan programs, we'll go through these quite quickly. We have many loan programs, but we're just going to cover the most popular, and I think the loan programs that'll probably appeal to everybody on this webinar. So our most popular program, and this is something that I had discussed before, is basically just common sense underwriting. If you're going to buy a commercial building, for example, you're not going to qualify off of your personal tax returns or your personal cash flow. You're going to qualify off of the cash flow of the property. And that's how we look at rental properties. So there's no rental income required. No personal income required. We're not going to ask you for your tax returns, your end of year statements. What we do is when we get the valuation or the appraisal on the property, we request a supplement to that. And that supplement, just like the value of the property, takes the comps for the rent and gives us an amount. Now, we have a one-to-one qualification on this, which means if you look at the bottom portion of the slide, it gives you an example. Say your gross rental income is expected to be $2,400, and your mortgage payment, which is principal, tax, interest, and insurance, is $2,400, the loan will qualify. If for some reason the rent doesn't cover the mortgage. You can always switch to an income loan, or you just actually adjust the LTV to where the loan qualifies. So it's a fantastic way to do it, fantastic way to qualify, and this is why we have such a high approval rate on our loans. We have 30-year fix, again, regardless of the borrower's age, and you're able to do a fixed 10-year interest only. And I think if you think about these interest-only loans, especially where rents are going, and say you buy in the areas where the CHIP Act is, you assume that that rental curve is going up and your payment is staying the same. After that 10-year period, when it converts to a principal and interest, you should hopefully have the same income coming in or cash flow coming in on the property, if not more. So if you're a U.S. expat, so you're filing U.S. tax returns, you maintain U.S. credit, we have made this like you're walking into your local bank, living and working there. However, no W-2 is required, foreign earned income is allowed, and foreign bank accounts are allowed. Now, of course, you still have to have, we need to update the slide, but needs to have at least a 640 credit score, which is, quite an easy score to obtain. And a minimum loan amount for these programs is $150,000. So $100,000 for our loan programs for the rental income, and then $150,000 on the ones that if you're qualifying using your U.S. tax returns. If you look at this, we qualify it again exactly like we would if you were in the U.S., where we focus on a debt to income ratio, which needs to be 43%. That conclude our presentation. This is our contact information. Again, in the chat, you can download the ebook. You can read the recent article that we were talking about with the CHIPS Act. You can apply for a mortgage, or you can just schedule a call with one of the loan officers. You can scan the Contact Us QR code if you'd like any further information. And after this, we will start taking some questions. So looks like we have some questions already in the chat. What I'll do is I'll read the question, and it's either going to be myself or Donald will answer it. So first question is, how does the portal work? Well, it's very straightforward. When you apply for a loan, first you're going to speak to a loan officer. You're going to get they're going to get your requirements, and then they're going to match it up to the loan programs that we have available. You'll receive an email with a recap of what you discuss. And with that, you're going to have a link to the secured portal. You go on there, and instead of filling out like a normal application where you have the little boxes, it's just a bunch of questions. What's your name? Where are you from? What's your passport, et cetera. And when you fill that in, it completes the loan application. It's going to ask you for a few documents. And with our loans, especially if you talk about our rental income loans only, what you need to provide is your passport and then 2 months of bank statements. And that is sufficient enough to issue a pre-approval. As you know, on your bank statements, we just want to see that you have the down payment and any closing costs that are involved. Okay, next question. I believe, Donald, you can take this.
Yeah.
It says, some of the key trends you'd expect to see in the U.S. property market in 2025. Very big question, but go for it.
Listen, during COVID, rates came down a lot, property prices went up. I've said this, which is a little contentious, which is I think the American dream of owning property to live in is, if I can say, I think it's dead. It's difficult. The amount you have to save in order to afford an average home is high. However, what does that mean? It means that they have to rent. And so people who can afford to buy a home will be in a better position to enjoy increased rental yields. Now, there's a lot of trends. We talked about one of them, which was the CHIPS Act, but it really has to do with what you want as an investor. Maybe you have relatives that live in certain states, or you have relatives that went to school there, or you're planning to send your child to school somewhere, or or you're comfortable with certain states because they have direct flights to where you live. These are all some things that I can help you talk through the rationale. But I think the big theme next year is, what Trump is going to try to do. And for sure, that means bringing manufacturing back onto the US and increasing jobs. And I think that's super important.
Perfect.
Here,
I think to kind of add on to that, if you're waiting for interest rates to go down, you and everybody else that is, especially the owner-occupied borrowers that have been sitting on these low rates, they're waiting for rates to come down and they're going to jump back in the market again. We're suggesting buying before that. This way you have more negotiating power than what you would have when there's 20 people going to look at one place and they're driving not only the price up, but it just makes it much more difficult. So.
Yeah, when people look at when they look at real estate investing, actually, so when you're in real estate, when you are a real estate investor, you have two levers. You've got cost and income. Cost is your mortgage, and income. Now the issue is, if you take a 10-year view or 20-year view, assuming you're not going to buy and flip this in a few years, do you think interest rates are going to be higher or lower now? I think all of us on this call are going to say lower. In 10 years, do you think property prices are going to go higher or lower? Higher. Do you think rents are going to go higher or lower? Higher. So if you wait, you're going to have to pay more for the home, right? But why not, if you're cash flow positive now, it can only get better because your margins are going to go up over time. So I think, just looking at the, like Robert said, trying to time this is really difficult. But if you can find a home that fits your criteria from a numbers perspective, and you feel good about the state, and it's, with all these, all things being equal, I think you should act.
Yeah, absolutely agree. Okay, next question, which sort of falls into this one. What do you think? Would interest rates come down soon and by a lot under Trump's administration? I don't know, you can go for that because I think
he's around for 4 years. So do I think, I mean, this is kind of a longer conversation, but I think he has enough tools to start negotiating certain things with certain countries. And if rates, I personally think that they are going to find a way to bring rates down. I mean, not just to make people like me, Robert, and you happy so they can buy a home. It's because the fiscal budget is paying too much for interest. So if they can lower that interest expense, they have more flexibility with other things. As the fiscal expense goes down, actually the folks buying bonds go, oh, interesting. And they want the overseas investors like China and big sovereign funds to buy treasuries. But if you think about the way it works is, currently the 10-year treasury is say 4.5%. So which means that I'm going to buy $1,000 or $10,000, I'm going to buy a treasury. And every year I'm going to get 4.5% till 10 years, which they pay me the principal. But if I think inflation is 3%, well, getting 4.5%, losing 3% of that, I only make 1.5%. I'm going to require a higher rate to hold that bond, which is what's happening now. So if Trump can reduce the fiscal deficit, right, and get people who buy bonds to feel good about that, okay, if I own this, I'm actually going to get my money in 10 years, it's not going to be deflated. That's interesting. And I think that is going to happen. It's just not, I mean, we all want instant gratification, but these things take time to kind of manage and stuff like that. But we're still in a world where there's a lot of positivity pushing home prices up. And I think, so to answer your question, I'm not sure about soon, to be honest, but we shouldn't be looking at these things day to day. We should be taking a longer term view because, one, I don't think all of us are busy making money. We don't have time to see what interest rates are doing on a overnight basis. But yeah, I think they'll come down, hopefully.
Yeah.
Here's an interesting question. Like it said, I heard Robert mention that US credit is not required. Is that correct? That have we've been doing this for such a long time. It's amazing that every day, every week, every meeting, people still are convinced that you need US credit as a foreign national to get a mortgage.
It's interesting you say that, Donald, because and the person asked this. Yeah, almost every call that we get, that seems to be the main question. Do I need U.S. exposure? Do I need U.S. credit in order to get this started? And certainly, that's not the case. Even if you're a U.S. expat and you've been abroad for many years, we can look at you like a foreign national, and we can still get your loan done. But at the qualification of what a foreign national would have.
Yeah, I think folks of you out there, I'll just tell you when Robert and I first started on this journey in 2018, and we came up with this problem we wanted to fix, we had to look at the entire journey of a customer, and inevitably what happens is, you want to get a mortgage and you kind of find a way to get a hold of a bank, or your relative in the US knows like a branch, somebody at the branch, and you speak to them and you say, hi, I'm so and so. I live in Hong Kong, and the first thing they're going to go is, oh my God, this is going to be so much work. And they're actually used to working with US citizens. It's not that they can't help you. It's just that 99% of all of their customers are US citizens. So they're used to asking for US credit and social security number. Now, could they help you in Hong Kong? Yes, they can, but they don't want to because you're too much work and they don't know how to. Whereas for us, that's all we do. We only work with people that don't live in the US, whether that's for a national or overseas expat. And because this is all we do, we're better at it, right? And we're experts at this. So yeah, I kind of went on a tangent there. So I get a little, passionate about trying to make this case. So super excited to kind of be a leader in fixing this problem for everybody out there in the audience.
Okay, next question. Are you able to recommend a surveyor or renovation contractors? Ourselves, probably not. However, the new partnership that we have with this real estate company, I'm almost certain that they will have a realtor that works in a specific space, if that's what you're interested in, and they will have all of the tools, no pun intended, in order to be able to recommend somebody for you.
Yeah.
Next question. Can I complete the entire mortgage process while abroad, or do I have to go to the US? I'll take this. Yeah, absolutely. So when you receive the link on the loan application, you can complete everything there. When you close your loan, meaning that you're signing your mortgage documents, depending on which country you're in, if it's part of the Hague Convention, super easy. You go to your local notary, and then you have it apostilled. If you otherwise, you can go to any U.S. embassy or any U.S. consulate, fly to the U.S., and in some options, we even allow power of attorney. So you can give a trusted advisor in the U.S. The option to sign on your behalf. Next question. Any tax advantages for foreign investors in U.S. real estate? So let me touch on this a little bit, and then Donald, if you want to kind of expand, but what makes the U.S. unique if you look at taxes? And when I say taxes, I'm including everything, stamp duties, estate tax or whatever it is. For one thing, there is no stamp duty in the U.S. So what you're paying is basically what everybody else is paying. It's all based on the county, whatever the taxes, the insurance, whatever that may be. It's very specific and does not change on the person or the passport that they hold. The only thing that adjusts is basically the value of the property that you're buying. Obviously, if you're buying a more expensive property, those things will actually be slightly more expensive. Now, when it comes to taxes, now, certainly I'm not a CPA or a tax advisor, but the US, again, is such a unique place. It has a bad rep when it comes to taxes, but it's absolutely the exact reverse. As a foreign national, you have the same tax advantages as I have as a US passport holder. Whether that's from when you're buying a property, selling a property, taking the deductions, whatever it may be, because real estate is such a driver of the US economy, they want foreign investors. There's no limit on who can invest except for obviously sanctioned countries, but it's such a driver in the market that they have to make it a fair playing field. And I don't know if you want to add on to that, but
Yeah, I mean, like every country, or everything in life, perception is not always reality. The US has done fantastic in some areas. Its ability to the stocks listed in the US are amazing. It's been able to promote its school system and education system very well. But as soon as you say tax, you think Uncle Sam and and like Robert said, we have a subsidiary that does international mortgages and international home equity loans in Canada, Singapore, UK, and Australia. And we have to see some of the tax, the stuff that's involved for purchasing in those countries, and it's a nightmare. So yeah, I think we got to write to the new administration and say you should hire a PR agency to talk about U.S. taxes because it's not that bad.
Absolutely. Yeah. And with proper tax planning, as I had mentioned earlier, you can pretty much zero out any income that you would be receiving on these properties, which allows you to actually see a really proper yield. Next question. Can your firm fund distressed properties and renovation costs? Can you also help out with auctions? That's a very good question. Normally an auction is going to be a cash purchase. So with that, because our loans take 30 to 45 days, probably won't work. When it comes to distressed properties, if you get a really good deal on a property, absolutely. The only caveat that we have is the property has to be in livable condition. So, there has to be a sink, there has to be a toilet, refrigerator, etc. But if the property needs work and it doesn't affect the health and safety of the property, then it shouldn't be an adjustment or any kind of hit to pricing or the loan to value. Next question. I am quite keen, but a little wary trusting realtors because of past experiences. Can American Mortgages help with that? Donald?
Well, first of all, you should be wary of, any service provider. We've been around for quite some time, so we've developed this trust of our clients over time. Realtors is a very sensitive, it's like a relationship. You kind of feel it or you don't. We have a network of realtors that we work with, and like Robert said, we are onboarding a company that actually connects like-minded realtors to our clients, because it was really important for us to find realtors that knew how to work with foreign nationals, because it's very different. You have to have, and I think, right now there's a good opportunity because business is slow in the US for people living in the US. So, you're probably going to get a lot better service than you would, say, in 2020 or 2021. And we're launching that, I think Robert said, over the next...
The end of February, the end of the month.
Okay, super exciting. So listen, you have to make sure that you're on our distribution list because once we announce it, it's going to be massive. And you want to be the first one that, gets notified when we do announce that partnership.
Perfect. So next question. I am a current U.S. property investor looking to expand my portfolio. Do you have any listings I can explore? We do offer, I mean, it's limited, but we do have listings on our website, so AmericanMortgages.com, also on 𝐸MG.Asia. They are vetted and trusted partners that are advertising it. So certainly you can look on that, or otherwise, as we had just mentioned, we are launching a partnership with a realtor program that will refer out to vetted realtors. So if you have a specific area that you want to do, but even before that, we have a very detailed list of realtors that we've worked with in the past. So if you have a certain area that you're keen on investing in, just, when you're speaking to one of the loan officers, let them know, and they'll put you in touch with realtors that we've had a positive experience working with in the past, and they can certainly assist. So I think that is the last question. So Donald, do you have any parting words for
hold on.
2025? Oh, you got one more
Yeah,
question?
one just popped
Okay.
up. It said, oh, this is so flattering. I wish I would have met you 5 years ago. I've just I purchased property not knowing I could get a mortgage, and I paid cash. And do you help refinance, pull cash out of the properties? Robert, that's your area.
Absolutely. So, and it kind of goes back to what Donald had discussed before, the Burr method or something similar to that. A lot of our clients so if you paid cash for a property, you can certainly refinance. Depending on the way you've structured the ownership, it can be anywhere from 65 to 70% of an equity release. Quite an easy transaction. Again, if it's a rental property, we can go just off of the rental income. So fantastic way to do it. And then what makes, again, the U.S. very unique, and us as American Mortgages very unique, is say you want to buy more properties, like the question earlier, you can pull cash out of one property at say 65 to 70% loan to value, take that cash and use it for a purchase of another property. And in that property, we can get up to 75% loan to value. So you can continually do this. And it's absolutely probably the easiest country to be able to do this, to be able to build a portfolio that, if you're going to use it for your retirement or whatever it may be, but you can certainly create it and do it with American Mortgages help.
And even if you need cash quickly, and you want to use your property to access cash by tapping into the home equity is something that we do as well. You think about it, over the last 10 years, nearly $1 trillion worth of US real estate was purchased by foreigners. And of that, over 50% and above was purchased by cash. And can you imagine all that equity that can be accessed for other reasons, or maybe it's bringing it back home to your home country, or you want to buy more property. Yeah, so it's quite exciting. Contact us. We can walk you through it. It looks like we have one more. I have, well, I think you should contact us directly. Ask, do you pay a referral fee if I introduced a friend or family? I'm like, yes, we do. We have an active referral business. We work with private banks, financial advisors, mortgage brokers all over the world to help their clients. Contact us directly and we can walk you through, how it works. I would contact Robert. His contact details are in the chat box, accessible to you.
All right, awesome. So thank you everybody for a fantastic 2024. We are super excited about what the future holds for 2025. Again, within the chat, you have the links for the various things, whether it's the ebook, scheduling a call for a loan officer, or the most recent article on the CHIPS Act. And Donald, thank you. We will see you, I think, in a couple of weeks for the next webinar. I believe we're bringing a realtor on where Donald will speak to him. Please tune in for that. And always, thank you, everybody. We appreciate your time and your business.
Follow us on Instagram, LinkedIn, TikTok. We need some more followers so you can get all of this information a lot faster and quicker.
Bye.